You're making it easier for people to buy cryptocurrencies. Is that responsible? Is that what we should be doing at this point in time?
Well, I think responsibly people should read, learn, understand what governments have been doing to money for hundreds of years, right? Every currency in history has failed, right? Except gold, which is really a metal commodity. And we're not saying to people, take your savings and put it in cryptocurrencies. We're saying learn about it. We spend a lot of time making videos, blogs, teaching people about it, and giving them very simple tools to put small amounts of money in, get started, learn some more, right? Potentially invest some more, go on forums, learn some more, but start getting into it, right? There are tens of millions of cryptocurrency wallets now, right? And the average consumer is not putting their life savings in, they're putting small amounts of money in. There are horror stories, but by and large, it's people acting responsibly.
Can we talk about the mood music, how it's changed from 2017? Yeah. Because last year it felt like everybody was on the cryptocurrency bandwagon.
Absolutely.
You went to a corner store and the corner store manager was buying cryptocurrencies. You hop in an Uber or another taxi, they're buying cryptocurrencies. And on the channel even, we were talking about every move in Bitcoin. Absolutely. This year seems quite different, as though some of that mood has calmed down. Yeah. Have you noticed that, and how big a difference does it make to you?
Our business has been growing. We're up, I think, 5x from January, but we're also a new company. So to put it in context, there was extreme euphoria in November and December, and we got way ahead of ourselves in terms of like this insane tulip-like spike. Everybody realizes that. What I think is happening now is all this infrastructure is being built for institutional investors to come into cryptocurrencies. All these lingering issues around how do they manage custody, how do they deal with certain SEC regulatory issues and other investment rights issues in the US, those issues are being worked out now. And I predict that as institutional money makes its way, therefore, into the crypto space, watch out. Right? It's not going to take a lot because it's still a relatively new asset class. When was the last time planet Earth had a new asset class?
Yeah, but Bill, I'm going to state my claim here. I think it's stunningly irresponsible for people to even have a little bit of education about cryptos and then go into investing it. I know a lot of amazing products out there, from the listed options market to the oil complex to the softs market, which I know quite a lot about because I've had a lot of experience in. I think trading them are devastatingly hard. They're dominated by insiders. I think cryptocurrencies is even worse than that because the chances of mere mortals understanding the algo crypto mining kind of technology behind it are very limited.
Totally agree. So Abra is not a trading app. Okay, Abra is an investing app the way Fidelity is an investing app for stocks. The average stock investor who does their homework long term in deciding which stocks to buy is not intimately familiar with the operational details of every company they invest in, but they invest for the long term. The average Abra investor is doing the same thing, right? They're not using Abra as a trading site to do arbitrage trading multiple times a day. They're making long-term bets on the fact that cryptocurrencies are here to stay. And that's the play with Abra.
Arjun?
Bill, I want to pick you up on a point you said earlier about institutional investors. You know, if we look at the end of last year, this was supposed to be the year of the institutional investor, waiting for the ETFs to come on market, new futures, etc. But a lot of those products haven't come to market. They've been slapped down by the regulators. So clearly the SEC and others don't feel that this time for these kind of products. So what's happened there? Why isn't there been that support from the regulators?
Yeah, so I think the issue with the SEC, quite frankly, is that the people who are doing the applications don't fit the mold of who the SEC is used to approving, right? I used to work for Goldman Sachs, but if you look at how I'm dressed, you probably wouldn't know it. So I probably, unfortunately, couldn't go like I am here to a meeting at the SEC to say I'm applying for, the ability to issue a new ETF. So I think what's going to happen is somebody who looks, feels, and smells like the way they want them to is probably going to get approved in the next year, which hopefully will open the floodgates for entrepreneurs who are also operating safely and soundly, but don't necessarily fit the mold of what the SEC wants to see. It's going to happen in the next year. I would actually, make a bet on it. It's got to. There's too much demand for it.
Goldman's ever have a dress down strategy, didn't they?
Well, when I was there 25 years ago, dress down meant your tie was a little looser. So
okay.
Yeah.
I don't know if they ever got involved in that chino trend and then come back again.
I think it happened, but after my time. So.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.